Since doing this video here on how I made over $223,000 in three stocks, I have been getting a number of questions. I want to provide answers to the key questions that I've been getting in terms of how to start investing in 2021 and beyond. I'm Tanya Taylor. I am the founder and CEO of Grow Your Wealth TV. I have a mission to teach a million people about growing their wealth, and therefore, my channel covers personal finance topics such as budgeting, repairing your credit, managing debt, and investing so that you can retire worry free. And of course, as a CPA, I love to talk about taxes. So you will hear me from time to time provide topics on taxes as well. Please subscribe to my channel, hit that notification bell so that you can be alerted when I post new content. Also, like this videos and comment, ask questions. All that helps the algorithm so that others like you can continue to see my videos. One of the biggest questions that I get is, should I invest while I have debt? My answer to that is you absolutely can. There is no rule that says that because you have debt, you cannot invest as well. But I will caveat my statement with this. If you have really high interest rate debt, then investing while having those high debt with no plan to pay it off will not make sense mathematically because you're paying out too much. Your goal at that point in time is to try to reduce how much you're paying. So you would want to work out the most appropriate debt management strategy. And that's going to be really important. There are different techniques that you can do to work out paying off your debt, come up with a goal, come up with a timeline, and then you would be able to allocate money to investing. And if you've been following me for a while, you'll hear me talk about the wealth trifecta, right? Which is budgeting, credit, and debt. They go hand in hand. If you have a lot of debt, you got to start asking yourself, do you have the right credit score? And if you have the right credit score, why is your interest rate so high? Are you able to transfer the balances from one credit card to a lower interest credit card so that you can pay off your debt faster? Again, saying that you don't want to get into the game of transferring balance from card to card. That's not the idea. The idea, however, is if you have a high interest credit card and you do have good credit and you are able to get a lower balance transfer, but you must have a plan of how you're going to pay that balance off over a defined time period. Then, while you're working on paying that balance off, if you don't have a budget, you want to create a budget so that you know exactly how your income is coming in and what it's being put against in terms of your expenses. You're going to discover a lot of really interesting things if you don't have a budget in terms of what you're spending on. If you check this video out here, I talk about ways that you can find money in your budget. These are very simple things that people do every day that they don't realize that if they cut some of these out, that they can find the additional income and then they can be paying down their debt and they can be investing at the same time. The reason why I don't recommend that people wait to pay off all their debt and then invest is that there is a power of compounding. And if you are taking a very long time and you have not become disciplined in paying off your debt, then you're not going to have any money put away. And that's one of the biggest issues with Americans right now, based on all the statistics that are out there. I also believe that people become incentivized once they start investing. They have a complete shift in their mindset in terms of how they spend and in terms of what they want to do with their money because they get excited. I see that in my students, so that I know it happens. But if all you're doing is you're paying off the debt, and you don't have a strategy, then you're just kind of going along and you're not incentivized. So, yes, do both simultaneously. But if you have high interest rate debt, you want to make sure that you are managing that debt. You're lowering the interest rate and you're paying that off as fast as you can. Another big question that I get is, how much should I invest? And a lot of times people think that they need to wait till they have $2,000 or $5,000 or $10,000 before they start investing. And that is absolutely not the case. You can start investing with as much as 5, 10, 15, $20. Now, is that going to move the needle? No, it's not. So ideally, you probably want to start with like $1,000 realistically, right? If you only have $100 or $200, I would recommend that you use an app as opposed to using a discount broker The difference between an app and a discount broker is that with the app, you can buy fractional shares. So if you love Amazon and you want to purchase some of Amazon stock because you've done your research and you have $10, you could buy a fraction of Amazon stock for $10 and keep purchasing that over time. Then it's going to start adding up. And your brain starts to think differently. So that money that you would go and spend somewhere else, when you have that app on your phone and you can just pick up your phone and just execute a trade only after you've done your research, what's going to happen is that you will find that it's so handy to just go on and invest in a stock as opposed to spending the money elsewhere. So don't wait until you have $1,000, $5,000, $10,000. Start with whatever you have right now. But the big caveat is that you have to understand what you're doing, because personally, I don't care how much money it is. I don't want to lose $1. And if I'm going to lose it, it will only be after I've done all of my due diligence. The market happens, and sometimes you are going to lose money. Do not take stock tips from others. Make sure that you are comfortable with what you're doing. I shared in this video here how I got burned taking stock tips from people that I had no right taking stock tips from and losing a lot of money. So that's not something that you want to do. You want to be able to keep the money that you've worked so hard for. Okay, third question. What should I invest in? This is really going to depend on your particular risk strategy. You are going to need to understand how much risk am I willing to take. For example, if I'm in my 30s and I am completely fine with putting large percentage of my investment in growth companies like the Tesla and Amazon and Nvidia of the world, then in my 30s, I can do that, right? But I again would say just because I'm putting a big chunk of money in those type of stocks doesn't mean I'm not going to have some safer investment in another portfolio, even in my 30s. It doesn't have to be the safe bond, but there should still be a balance. Now, once you start hitting your 40s and your 50s, you should be more broadly diversified. If you don't have ETFs in your portfolio, if you don't have index fund, if you don't have mutual fund, then you want to consider having those in, because those are going to provide you with more diversification. If you want to learn more about ETFs, index fund, and mutual fund, check out this video here. I go in detail about all three of them and what might make the best sense for you. Let me know, how much are you currently investing and what are you invested in right now? If you're not, what is your biggest fear about investing in the stock market? Comment below and let me know. Question number 4 is, how do I make a purchase? The way that you would make a purchase is that, well, most brokerage firms do no longer charge a fee. And apps, some of them do have fees and some of them do not. But you can invest in fractional shares as little as $5. Now, for me personally, I use TD Ameritrade and Fidelity. I don't really purchase fractional shares, but it's mainly because most of the times when I'm buying larger amount of shares. However, for my children, we've opened up a stash account and an M1 Finance account for them so that they can trade using these apps, because they're not going to have the money to purchase whole shares of some of the companies that they're interested in purchasing. I have included the links below for both Stash and M1 Finance. You can use those to invest and really make sure that you diversify your investment. In terms of how you make the purchase, it's actually pretty simple.
So it's been a couple of days since I started this video, and what I decided to do was to open my own Stash account. Now, when you get to Stash, it's going to take you to the home screen and you'll be able to see a snapshot of what's happening in your account. It tells you how much you have invested and how much you have available to invest. And there's some other details. Yeah, so then we would move from the home page and I will talk about the bank next. And the bank just tells you your available balance. If you want to move money, direct deposit, you usually get a Stash card in the mail. So you will see that as well here if you want to activate your card and you can set up your own goals. And then you could do auto stash, which is where you can actually create a schedule. So most of my accounts, I have everything set up automatic anyway. And now that I'm investing in this stash, I will most likely set up a automatic schedule to have a small amount come out every week so that I can invest. Then this is the tab that we want to go to that I will show you how to invest. You have two options. If you already research your stock and it's here on the list, you can just click on it and invest. Let's say you would research Aaron S. Company Inc. I have no idea what they are. You would click add and you would decide how much you want to invest. So if you wanted to invest 25 bucks, then that's the amount that you would do and you would hit continue. And it gives you the option. Do you want to do it every week, every 2 weeks, every month, just once, and then continue? I'm not going to hit continue because it has a lot of my personal information on the next page. But once you hit continue, it would provide you with like your account number and your checking account. It doesn't provide the full details, but it does provide some information. And then you would just purchase. So that's the last tab that you have that you would just make the purchase. So I'm going to close out of this now. The other option that you have is if you just want to do a quick search, you can do it that way. Let's say I wanted to buy Baidu and I know that the ticker symbol is BIDU. It would just automatically pop up. So BIDU, and you would just select it. And then you would go through the same process, putting the dollar amount in, and then you would buy. So that's pretty much how you would go about making a purchase on Stash. I do hope that you found this helpful. Go out and open a Stash account. I have a link that I've included below. It's 2021. It's time to start investing if you haven't, or to resume investing if you have been investing. So go ahead and do that. As I mentioned, I do teach people all about money management. So whether it is getting rid of your bad credit, managing your debt, investing, or planning for retirement, it's all housed in one place. You will learn so much. You will grow your wealth, and you will be able to retire worry-free and leave a legacy for your family. So if you would like to learn more about what I teach, then you can click on the link below and I would be happy to talk to you further. Also, don't forget to like my video and share it with others, and hop over and join me in my Facebook community.